Welcome to the world of Test Portfolio XSX. This video was created with the help of artificial intelligence. It provides a weekly summary of key economic events. The featured portfolio is simulated, fictional, and reflects my personal perspective on recent market developments. My main goal is to explore whether the S&P 500 can be outperformed. To do this, I compare the performance of three different portfolios: my own fictional portfolio, an S&P 500 portfolio built using a lump sum investment strategy, and an S&P 500 portfolio built using the dollar cost averaging method. This video reveals which strategy performs best and why. Disclaimer: this video does not constitute financial advice and does not recommend the purchase or sale of any financial instruments. I do not take responsibility for any potential inaccuracies or errors that may occur. Ready to get started? Let's go. Oil price shock and interest rate squeeze. Will Wall Street be strong enough to shake off the Fed and Middle East double bind? Midweek, the Fed held its policy rate at 4.50%, but its new dot plot for the first time shows two cuts due by year-end. In the press conference, Jerome Powell emphasized remaining patient due to tariff-driven inflation risks, while Governor Christopher Waller urged a cut as early as July, sending the short end of the yield curve down by half a percentage point. Growth stocks benefited, while banks came under pressure. Meanwhile, Israel's new airstrike series against Iran's nuclear facilities pushed Brent up 11% to $77, as markets priced in a real chance of a Strait of Hormuz closure. Higher energy prices immediately lifted U.S. inflation expectations. The 10-year TIPS break-even rose from 2.57% to 2.70%, weighing on consumer sector equities. In China, May data were mixed. Factory output slowed to a 6-month low, while retail sales jumped 6.4% thanks to state stimulus. Slowing external demand and the Trump-era 55% average tariff are fueling yuan depreciation pressures, which through a stronger dollar squeeze the FX earnings of Wall Street multinationals. In the Eurozone, the ECB pledged flexibility in light of geopolitical risks, but the divergence from Fed policy strengthened the dollar index by 0.7% on the week, an extra burden on non-USD export revenues. The three major indices traded in a narrow range. The Dow rose 0.1%, the S&P 500 slipped 0.2%, and the Nasdaq Composite gained 0.2%, the net result of Fed cut hopes buoying growth names versus the oil shock capping the broader market. By sector, energy led the winners with over a 1% weekly gain, as the Brent rally directly improved cash flow forecasts for Exxon and ConocoPhillips. The biggest losers were communication services and renewables. Enphase Energy plunged more than 15% on fears of solar panel market saturation, dragging down the sector. On the stock-specific front, defensive grocer Kroger jumped nearly 10% after raising its full-year sales target, signaling that households are turning to in-store promotions in a high-price environment. Used car retailer CarMax also closed up 4.5% on tariff-driven demand. Markets are navigating two fronts. On the monetary side, Fed signaling has finally opened the door to rate cuts, while Middle East tensions have instantaneously revived stagflation fears. Traders are now weighing whether Powell's gradual adjustments will suffice to smooth out geopolitical price shocks, or if the next oil surge will rewrite the entire rate path. Your turn? Which poses the greater risk? Fed delays or a sustained Iran-Israel conflict driving Brent above $80? Comment below on which scenario would upend your portfolio more and why. Closing note: to catch next week's lightning update, hit like and subscribe. Same time next Friday. Who blew past analysts' expectations this week? Let's see which major companies' earnings reports shook the market from June 16, 2025. Technology, Adobe, creative software and digital media. According to Adobe's Q2 2025 financial results, revenue rose to $5.87 billion, representing an 11% year-over-year increase, and non-GAAP EPS was $5.06, beating the $4.97 analysts' estimate. The company raised its full-year guidance to $23.50, $23.60 billion in total revenue, and $20.50, $20.70 in non-GAAP EPS. Adobe's shares fell 0.3% in after-hours trading following the report. Financials, no major reports. There were no noteworthy large-cap financial sector earnings reports this week. Healthcare, Sarepta Therapeutics, gene therapies for rare diseases. Sarepta announced it is investigating the death of a second patient treated with its Elevidys gene therapy, and withdrew its 2025 revenue guidance. Its Q1 product revenue grew 70% to $612 million. The stock plunged as much as 42%, hitting a 9-year low on the news. Energy, Renew Energy. Global, wind and solar power. In Renew Energy, Global's Q4 2025 earnings, EPS of 10 cents beat the 7 cents consensus. Shares fell 2.24% at the market open following the announcement. Consumer, no major reports. No significant consumer sector earnings were released this week. Industrials, no major reports. No notable industrial sector reports this week. Transportation, Delta Airlines, air transport. Delta Airlines reported Q1 revenue of $13.0 billion, up 3.3% year-over-year, and EPS of 46 cents versus 38 cents expected. For Q2, it forecast revenue between a 2% decline and a 2% increase, and EPS of $1.70, 2.30, below the $2.30 analyst consensus. The stock gained 2% in pre-market trading. Technology led the week. AI and digital media wins bolstered investor optimism, while healthcare and renewable energy headlines drove sharp volatility. The market shows a mixed picture. The narrative battle between innovation and safety remains front and center. Which earnings report surprised you the most? Strategy status. I have not changed anything about my previously defined investment strategy. Core element. I continue to build upon the market success and innovation advantage of chip manufacturing companies. Expectation. According to my original forecast, the share prices of chip manufacturers will rise, so I see no indication to exit or modify. In summary, I have made no modifications to my strategy. I still expect chip manufacturer stocks to produce significant price increases. So let's see how the three strategies have evolved. Strategy 1, lump sum, one-time investment, blue line on the chart. The first investor bought an S&P 500 ETF on January 2, 2025, investing the entire $15,000 at once. They've held the position ever since, no additions, no withdrawals. Current performance year-to-date, 93%. The blue line reflects this result, based on the most recent Friday closing price. Strategy 2. Dollar cost averaging. Gradual investment, green line on the chart. The second investor splits the $15,000 into 12 equal parts, investing $1,250 on the second trading day of each month into the same S&P 500 ETF. This approach helps smooth out volatility and reduces the risk of poor entry timing. Current performance year-to-date, 47%. The green line reflects this strategy, slightly outperforming the lump sum method so far. Strategy 3. My fictional portfolio, red line on the chart. This portfolio is based on my own stock picks and investment decisions. It launched on March 19, 2025, with the full $15,000 invested in various individual stocks over multiple transactions. I've explained my choices in earlier videos. Current performance year-to-date, 11.07%. Note, these performance metrics exclude broker fees and taxes. They reflect only market-based price movements. Thank you for joining us on this economic journey with Test Portfolio XSX. If you enjoyed this weekly recap of the key events and our portfolio's performance, give it a like, subscribe, and join us again next week as we review the latest market moves and the progress of our investments. Disclaimer. This video does not constitute financial advice and does not recommend the purchase or sale of any financial instruments. I do not take responsibility for any potential inaccuracies or errors that may occur.